India's largest engineering and construction company, Larsen and Toubro Limited, is adopting a multi-pronged strategy to stay afloat. When Indian economy is slowing down and there's intense competition in the international market, the country's largest engineering company is adopting a strategy where they are stripping assets. Also, they are chasing more international orders. Here, I am joined by Madhura Karnik to discuss this strategy in detail. Madhura, welcome to the show. Could you tell us what are the key things L&T doing in terms of selling its asset? Because we understand many Indian companies, especially infrastructure companies, are selling assets.
So one important point, as you mentioned, you are right that they are trimming the size of the assets of the company. So one important thing they are doing is they are separating businesses into subsidiaries, developing them, adding capital, and then those can be used to raise capital. That is one. The second part is that, as you know, the IDPL aspect of the company, that is a potential for overseas listing, which can again infuse capital. The third part of selling assets basically is everyone knows about the Dhamra port, and they are in talks with people. So basically, they are developing assets, adding value, growing the assets, and then selling it at a very good price, which is adding value to them as well as the assets. So it's a very good strategy that they are using, and analysts have said that in the past too, this has happened. For example, when they sold the Bangalore airport terminal stake to GVK, they got a good premium on the investment, and that in turn helped the cash flows of the company. So this is a strategy that they're going to use.
I think this strategy is not new, because GMR Group is also have also adapted this kind of stuff starting from 2012. So how are they listing out? How are they carving out? What are the key subsidiaries which have been doing, and what are the long-term plans by carving out into different company?
So most recently, when L&T declared its result, it said that they have now formally and legally separated the hydrocarbons business. So that is one. In the past, they have done that with the electronics and electrical automation businesses. We know IDPL, of course, they have done that with L&T shipbuilding. So what they are doing is they are picking out niche business segments and converting them into companies, and in the long term, as you said, they will get a bandwidth to specialize in those areas by not mixing it with the core operations, which is engineering and construction. So there are actually two strategies in this. One, they are trimming the balance sheet, and two, they can now specifically concentrate on individual companies and not in the entire business as a whole.
Thank you so much, Madhura. Here, general elections are around the corner. Indian markets is slowing down, and international markets are of course competitive. But India's largest engineering and construction conglomerate is not staying away or shying away from participating in this intense competition. They are selling their assets to stay afloat, and they're also chasing more international orders. And in long term, we could see that some of these subsidiaries will be listing, and they will be raising money out of them, and they will be reinvesting in the new fresh projects. For more updates, log on to www.liveman.com.